Hi, we're live.
Hey.
Hello, everyone. September 26, 2024.
Yeah, live from a seedy hotel room in Barcelona.
The only thing you need is like a flashing neon sign behind you. You know, that'd be cool. Yeah, cool stuff. Yeah, Richard is in Barcelona at a little event doing some stuff down there, so that's kind of cool. Yeah, we got some interesting things to talk about today. Actually, let me just before I do that, I will just quickly remind everyone to put your questions into the Q&A section of the chat if you want to have a little chat afterwards and have some questions answered. I can see we got some people still rolling into the room. Gee, Andrea, hey, Vladimir, good to see you guys. Good to see everyone. We're still waiting for people to come in. So while we're waiting, let me just bring up the slide here just to show people what we're going to be talking about, among other things. The SEC has approved Bitcoin ETF options. And we knew it was going to happen. We just didn't know when. So I think that we're going to just sort of chat a little bit about what effect that could have. You know, I think vol suppression, squeezes, the zero DTE crowd probably start coming in and playing with options, and we can start talk about what we might want to anticipate and how it's going to affect positively or negatively, or how we can maybe take advantage of it going forward. All right, still waiting for, I guess, more people still coming in. That's great. All right, good stuff. And I will remind people, too, that if you want to save 10% on your Deribit trading fees, if you don't already have an account, please just check out the link in the chat. Or if you're watching this on YouTube, check out the comments below, and you'll see the link down there. Or you can join us at roguetrader.academy. You know, we do a live stream just about every day, and we do live calls and trade alerts and all kinds of good stuff. So you can hang out with us during the week, as well as on Thursdays. All right, so I think we should just get going here.
Yeah.
Let me just see what I got going on here. What I'm going to do is I'm just going to share. Let's take a look at the market. It's actually been it's been bloody boring, but I think that for most people, it's actually been pretty good because it's done what it's supposed to do, but it's holding up really, really well. So let me just share my charts here. I think this is it.
We've had a good month in the systematic books.
Yeah, vols have been decent. I think you were mentioned before the call that they've come off a bit. They've been crushed a little bit, but they've been actually pretty decent. Oh, I will mention, I thought just before I get started, I did notice today. So most days I get this feed where it tells me what happened in history, right? And most days it's like but something curious today. It was the first televised U.S. presidential debate. I think it was between Kennedy and what's his face, that crook, Nixon. It was the first one. It's kind of relevant, because we got the presidential election coming up soon. But on the same day, it was back in, I think it was 1960. It was the first televised presidential debate. But on the same day, the Beverly Hillbillies debuted. And who knew that was going to be the harbinger of this sort of bastardized love child that we're seeing today, which is really the Beverly Hillbillies and the presidential debate. Anyways, my personal commentary.
Brilliant.
All right, so here's the chart. You can see we've really been holding this area. This red area has been a sticky area, and look, it's stuck there again. Surprise, surprise, surprise. And I think for a lot of people who are bullish, this is a really good sign because it's stuck here. It didn't immediately just come back down into this zone down here, 57, 60, low 60s. It's really stuck, and it keeps threatening to go up and then comes down, threatening to go up. So, a lot of people have, and we'll take a look at the liquidity map, and we'll see, as you guessed, all the liquidities right here and right here, because everybody's in the same boat. If you want to get any value for short-dated options, well, that's where you got to sell the damn things, right? If you're selling 20, 30 delta, whatever you're doing, if it pokes up, everybody's going to move to the same place. But if we do get a move up, this is an area of a vacuum, and all trading is level to level. I would expect it to get up around here, and that's where I, of course, be selling call spreads, maybe even buying some puts, looking forward to monkey around in that area. But we'll see what happens. It depends on how it gets there.
So are you saying, are you thinking that like 62 up is like the base now?
Well, it has formed a bit of a base in this this area of support and resistance. So I think there's a just as good a chance, if not better, that we might end up moving up from here. And typical Bitcoin fashion, like look, did it over here too. Oh, whoa. Who knows? We might get a repeat of that nonsense. I don't know.
I was saying at the beginning of the month, wasn't I, on one of the podcasts that we've always said that October is always an up month, and it has the law of always being an up month. And therefore, if you were an institutional investor looking to get ahead of the retail crowd, you would probably be buying in September. And I think I remember saying that second week of September was my sort of threshold for I thought that when that would start to happen. And for once, I was right. We've actually seen consistent bounce through September, but we've actually seen this literally consistent up since the middle of September.
Yeah, because here's September 14th right here, and most of the beginning part of September was pretty ugly. And September is historically a down month, and you're right that we just kind of had a pretty decent move up, and it's held so far. So we'll see what happens. So I think that I am starting to run some long gamma strategies as well. I'm going to adjust that a little bit because you really got to get the timing right to make that pay. It's a bit of a tricky thing.
We might be back into sort of 1x2 territory, like long 1x2 territory, maybe. Now the vols are lower, the smile's going to be a bit less.
Yeah. In my ideal situation, and this will only work out a percentage of the time. Let's say I have a clean book, and I say, you know what, I'm going to go a long strategy. I'm going to buy a 20 delta call. I'm going to buy a 20 delta put, and let's see. Well, I could do that as a spread, a long iron condor, and reduce the cost by a little bit. If I want to have my cover up here, so I can get some bang for the buck if it moves my direction, I'm going to get very little for that. Ideally, you put that on as a long strangle, and then when the thing does go your way, one way or the other, then you sell the other side to more than offset the cost of it. But it's not always going to work out that way, right? So let's quickly take a look. I refreshed the inflows, and yesterday we had 1.65K of Bitcoin inflow, and look, this is 5 days straight now, which is quite nice. And we only had one negative day out of sort of the last 2 weeks, and that was kind of a small day. But Fidelity was actually negative yesterday. So it was BlackRock, and it was this.
I've always thought that Fidelity were one of the more stable ones, actually.
They were 4 days straight. They were buying, and then previous to that, they were buying too. So they really are. They just happened to have one day when. Out of the last kind of 2 weeks where they were sort of negative. So
we're still not seeing sort of mega adoption here, are we? We're still not seeing like a gold rush yet.
No. Look at this. This is lame. Like there's very little people doing anything right now. Everybody's kind of sitting on their hands. But we just punched this level of liquidity here. Yeah.
Mm-hmm. Okay. That's interesting. It hasn't just bounced off that. There's expiry, of course, tomorrow, and it's a big expiry. It's for Deribit and other crypto native exchanges. It's a double witching, right? It's quarterlies and weeklies and monthlies, and it's double witching actually. And this week was a quadruple. Or was it last week? Was a quadruple witching on S&P? Yeah.
That's right. Yeah. Not much. S&P stays strong. Gold ripping. Oil dumping, which is annoying me, but yeah.
What I've seen here in my vol book. So for those who don't know, I trade vol strategies for funds and family offices, and we've seen vols crushed all this month, down from close to 60 now to below 45. And we've been short vol all month. So it's been a great month for us. I think we've done about plus 3% for the month to date. Which doesn't sound stupendous from a DGen point of view, but if you're trying not to lose any money ever, it's a great. That's great. We're happy with that.
Yeah.
So it'd be interesting to see what happens in September, right? And sorry, October. What's now?
October.
September. Yeah, October.
Yeah.
When everyone's really sort of back to work.
Mm-hmm. Mm-hmm. Yeah, I think we've been talking all year, and a lot of the people that we deal with in and day out, they were like, no, probably nothing going to happen in the summer, maybe a sell-off, and it's going to start to wake up in the autumn, and then by the end of sort of Q3, Q4, they think it's going to rocket ship up.
I think it's going to. Sorry, I'm fiddling about here because I'm kneeling by a bed in my CD hotel because it's so small. There's not even a desk here.
That's the last time I was going to make a comment about booking online. It
looks like I'm like standing in front of a cathedral, but no, it's just a curtain in a hotel room in Barcelona. I was going to say, so I reckon my cynical brain says market's going to be complacent and look like it's going to burst up. We're all going to get long. It's going to have one last wick down just to screw everybody, and then start driving up for Christmas, and start grinding up all the way through October, November, December. That's kind of my working hypothesis at the minute for myself.
Could be. Yeah.
This is based on nothing more than my own imagination. So please don't go making trades on the basis of that. But.
Yeah, and we've been trading for a couple of decades, and usually when you get a big move up, either it just goes and it's too late for people to jump on board, or they I'm not buying now, it's near the high, and it just keeps going, and then they live with regret for not punching in, or there's some big wick that just screws everybody over, scares the pants, and gets them all scared, and then it goes. It's not just going to just hey, come and get in now. Oh, come on, get in now. It's not going to do that.
Yeah, Ken Griffin of BlackRock is not going to let you get on the ride easily. Right? You're going to have to hold on with your knuckles if you want to be on with him. So
yeah, good stuff. All right, just I'll answer a quick question here from Hans. Why a black screen and not blank so I can see a clear line? Well, I didn't know you couldn't see it, so just next time, just say, hey, can you make it white? And I'll make it white. I don't know. I'm just used to having it black because if I have too many white screens, it hurts my eyes because I've got 8 screens around me, and it's just it feels like I'm having a radiation bath. Yeah. Let's talk a little bit about SEC has approved BlackRock's request to list options on Bitcoin ETFs. And for those that don't know, I mean, we could talk a little bit about the options market and TradFi markets, and options kind of drive markets. Option markets are usually much, much, much bigger than the derivative market they represent, and we might start to see that that iceberg again. And we've talked about this in the past, maybe even a year ago. We said it's just a matter of time, whether it's 6 months or 6 years. The option market will probably grow a lot larger than the Bitcoin spot market.
Yeah, we've been saying that for a while. So what I imagine is going to happen is that as soon as these options become available on the ETFs, people are going to start. American investors are fully on board with the idea of covered calls, right? So it's a very common thing to have a stock portfolio and then sell covered calls over it, and people see that as an extra form of income. And of course, to the point that the S&P VIX has been driven down to such a degree that it's now no longer worth even bothering selling covered calls because the vol's so low. And there's an argument that says that US investors will do the same to the ETFs. They're going to buy an ETF and then they're going to sell covered calls against it, and that's going to crush the vols on the options on the ETF. And of course, then by inference, because of the arbitrage trade between the ETFs and the underlyings, that ought to also crush vols on the native options on the likes of Deribit. I'm not entirely sure I fully subscribe to that because there's a couple of difficulties. So first of all, regulated firms have difficulty getting onto access to Deribit. I mean, Deribit is seeking to sort of solve that with becoming regulated, etc. But there's a whole bunch of friction between the regulated world and the sort of crypto world. So and that's why there's still a huge what's it called, basis premium for if you buy spot and sell futures, you can earn 8%, 9% a year. Where else can you get 9% a year on your dollars? Right? and you could do that tomorrow on Deribit. And that trade has existed, sat there, existing for the past 5 years on Deribit.
Mm-hmm.
And at any point, somebody could have gone to CME or wherever and blown that trade out of the water, but it hasn't happened because it's just difficult and friction and all that. And I also think, Bitcoin ETFs are going to seem exotic to a lot of people. If I try to explain to my mother why she should put money in a Bitcoin ETF, she was going to say to me, "So what's the price earnings ratio? What's the yield? What's the well, none. There's no yield. And what does the company do? Well, nothing. And
hang on, it's like the 1990s all over again.
It's going to be hard to. So why should I buy it? Well, because it's Bitcoin, right? And it's going to be hard to explain. So I think the adoption probably isn't going to be a stampede, and we've seen this. That the adoption of Bitcoin ETFs hasn't been a stampede. It's essentially been rotation out of Grayscale back into BlackRock and the others, with a little bit of retail coming in, right, in clips of like 12 grand, 13 grand a day, right? So, so that I think that limits the market for the options on these ETFs for now. But if institutions decide they want to start scaling in and doing arb trades between the cash market and the ETFs, then arguably, yes, you could have vols being squeezed down as they all get into this, selling covered calls trade. And that will probably also affect the basis trade. So you'll probably find the basis yields start getting crushed a little bit in Bitcoin. And for me, that will then be a signal that everyone's piled on a bit too much, and it's only going to take like a 5,000 move up in Bitcoin, and suddenly all these people are going to be scrambling for the exits and buying options like nobody's tomorrow. So probably as Wall Street figures out how to trade this asset, there'll be mistakes, and those mistakes will translate into actually more volatility, in my view, or more volatility, which is fantastic for strategies like mine that depend on averaging into that vol. So I'm actually hopeful. A number of my clients have asked me whether it's going to crush yields, and my answer is no. I think it's going to increase them.
I think go ahead.
Because we've got more. We'll have more people getting it wrong.
Yeah, and something that just popped into my head, and I hadn't really thought much about before. It stems from a conversation I had during coffee this morning with someone. We're talking about how the S&P seems grossly overextended, and it could go up another 20% for all we know. I don't know. It could crash tomorrow. It could crash in 2 years. I have no idea, but it's going to. The market always has a correction, but this time it is different in terms of there are other assets. If you were trading in the 80s or the 90s or 2008, well, you just had the TradFi markets. That's it. You were trading bonds or stocks or whatever. That's it. All the money was in one pool, but now money is in some other pools, Bitcoins, ETH, even all, the thousands and thousands of crypto tokens out there. Are they all going to take a wash or a bath if the S&P dumped 30% tomorrow? To some degree, yeah, some more than others. But there won't be a rotation out of every single asset there is, because there's so much more. I guess it's so much more diluted. And I kind of wonder, let's say that the market does have some form of correction. I'm talking about the traditional market like the S&P. We will see, usually there's that reactionary move where Bitcoin is correlation, some amount of correlation, but then a quick bounce in Bitcoin because maybe money is rotating out of the TradFi and into Bitcoin. And I think that, as the odds in my mind increase of the TradFi markets having a correction, I think that will make a huge spike in volatility in Bitcoin as well. Because people will be scrambling to buy options and doing things. And there's also too, as hedge funds and more sophisticated investors come on board with these Bitcoin ETF options, they'll be doing things like, selling cash secured puts and, doing other strategies you would see in the TradFi space to accumulate that Bitcoin. And just those volumes will just start to grow and grow. And maybe, and you said, as Wall Street figures out how to trade this asset, it shouldn't take them too long. They're very, very good at what they do.
Well, yeah, there's Wall Street, but there's also, all the individuals on Wall Street.
Sure.
No, but a lot of people have come to Bitcoin knowing options and then found themselves dashed to pieces by Bitcoin, because it's there's nothing. I've never seen a more aggressive asset than Bitcoin. And there is this sort of hidden. There is this. Bitcoin has this one thing that no other asset has. Well, it has lots of one things, but what the one thing that it has in terms of its price capabilities is that it has this absolutely fixed supply. Now, the fixed supply may not be as fixed as we think, in terms of there may be a whole lot of Bitcoin that can quickly unlock and become liquid. But in the end, there is this fixed supply. And not even gold or platinum has a fixed supply, right? There's more gold in the earth to mine. And if we run out of that, we can always send a mining spaceship up to an asteroid and get it. It's there. It might be hard to get, but it's there, right? But with Bitcoin, it's absolutely fixed. Now, I've been on record a number of times saying that actually, when we get to that limit, and people are demanding more yield or more liquidity, in the end, I don't think they'll tolerate the fact that it's limited capacity, and a Bitcoin 2 will emerge, and then a Bitcoin 3, because people will just need there to be more of them, and the market will kid itself initially that's okay, that we'll just stick with 2, or we'll just stick with 3, and then it'll become like $1. We'll just stick with $1 trillion,
and just turn on the printing press,
and then that's my thesis for why, in my view, in my life, I will see Bitcoin at $1 million, and I'll see it at $0.
Could be, yeah. I guess all I was trying to say was, as Wall Street comes on board and they deploy their usual tactics, and maybe scaled back. You're right. Bitcoin, go down 20%, then up 20%, and not that stocks don't do that from time to time, of course, but it's a little bit different animal. It's
well, the thing is, if some stock dumps 20% and it's some crappy stock that no one cares about, it's not. It doesn't make the headlines, right? But if Bitcoin dumps 20%,
Magnificent 7,
if Bitcoin dumps 20%, which it does every year in a day, it's going to make the headlines because it's Bitcoin. It's the new kid on the block. So it's going to scare the bejesus out of everyone. Right?
What else can we talk about in terms of what about squeezes? How do you think it'll affect squeezes?
I think the opportunity for people getting squeezed on Wall Street is humongous, because these in the same way that Bitcoin has limited supply, then obviously these ETF shares have limited supply. And if people need to go buy more ETF shares and don't exist, they're going to have to mint them. And by minting them, they're forcing Bitcoin to be bought. And I presume these ETF options are going to be Americans, right? So you're going to have all kinds of opportunities for shenanigans of exercising while out of the money, causing people to have to stampede to go and buy liquid stock, and then I think there's all kinds of. So I think certainly beware expiries, and particularly quarterly expiries.
Do you think China might have any influence on this and their ability to potentially control?
Well, I learned this week actually that the 55% of the hash rate is currently in China, even though it's illegal to mine Bitcoin in China.
Yeah, imagine if they legalize it.
Yeah, well, it probably wouldn't change, but
wouldn't it explode? No.
I think anyone who has the capital to be mining Bitcoin illegally in China would be the same people mining it legally.
Probably already doing it. Yeah. Well, you'd think they'd be able to expand their operations, but what do I know? I don't really.
Yeah, but it's not going to. I mean, that's not going to increase supply. I mean, there's a fixed rate at which supply can come on the market anyway, right? So, your question, I think, is part of a wider question, which is America still the center of finance of the world? Is it the locus of all financial power that's going to be driving markets? I think for the moment it is, but I think probably we shouldn't underestimate how much foreign money is actually in the US markets via carry trade and looking for safe havens and all of that. And in the multipolar world, which is coming slowly, and then I think eventually much more quickly, once people get confidence that they can earn yield somewhere else, like Beijing or Singapore or wherever, and in fact they can do it more reliably because those countries aren't quite as heroin addicts in the same way that the Americans are for free money yet. Then actually you could find liquidity getting sucked out of Wall Street, quite aggressively. It could be quite nasty. And as to what that does to Bitcoin, goodness knows. Right?
Yeah, and it's not like we haven't seen. There's always been some dominant exchange. We see them in the Netherlands or London, and those exchanges tend to have their peak and then decline. And we're seeing a lot of Asian exchanges come really on the uptrend. So you're right, money will flow. One last thing, because we're almost at the end of our call here, I thought maybe we could talk quickly about the zero DTE or days to expiration crowd. It's been the rage the last few years for people trading these near-term expiry options, whether it's same day or next day, whatever. Really kind of pushing the markets around a little bit. And of course, now these people have an opportunity to do that, or will have an opportunity to do that. And I kind of wonder if that's going to have some effect. And, Bitcoin's a different animal. It's a completely different animal. And I kind of wonder if it'll basically be the same old crap with Bitcoin and the zero DTE plan, or if it's going to be a little bit different just because of the nature of Bitcoin.
So what's zero DTE done to vols on stocks? Has it just crushed the short-term vols?
Sometimes I'd say yes. But these, it's this, you got something expiring in 6 or 8 hours and people are piling on and pushing one way or the other. And then, the stock, people are, the market makers having to scramble and they're hedging, and it's just causing this volatility, I think, short term.
I think you're going to want to be really careful, I think, to be going in hard on zero DTE. So short strangles on Bitcoin, which is the obvious trade, right? On Bitcoin ETFs, because the underlying market in Bitcoin isn't regulated, and there are people out there who've got a lot of money who can literally move Bitcoin around by sneezing, and so they can, without breaking any laws, Bitcoin could move aggressively simply because there's so much open interest on options on the ETFs. So I think
maybe the bigger opportunity is being long options, zero DTA, looking for these people to do those things.
It could be. Yeah.
To me, I'd rather probably trade the zero DT on Bitcoin versus, Tesla, for example, or the S&P. I just feel there's more opportunity to double, triple, quadruple your money in a day type of thing. But
we'll see.
Yeah, we'll see. I don't do a lot of the zero DT thing, and so I can't say I'm an expert on it. I just, every bloody day I see an article on the damn thing, though, and I know this, it's just gotten so popular, and
why?
A lot of people have been killed doing it too.
It's why you see so many articles doing it. Imagine how many broker fees are earned from zero DT options. I mean, when I used to trade options on FTSE, I used to trade monthlies, and I would sit and trade a position and hold it for 2 weeks, and I would therefore pay trading fees in and out every 2 weeks. And these guys are paying trading fees every day. Well, of course, the brokers are going to pay the press to push the story, right? They love it.
That's back in the old days when you used to have to call your broker on the telephone. It's like ring, buy, sell, buy. Yeah, fantastic.
I prefer it. What I found is that when trading on the phone, you can remember what you said, and so you can actually build the book in your head. You don't need a screen. And what I find, if I do it on screen, I forget what I've got. I have to keep looking.
Like, what did I sell? What yeah, I do it all the time. And then if you're running 10 different books, it's like, this shit, I don't know. You have to look. You're right, because you verbalize it. You said, just like we remember all those phone numbers when we were kids, right?
Yeah.
Bloody hell, I don't even know my own phone number barely. So.
I can't even remember a Telegram handle these days.
Yeah, fantastic. Hey, that's we're at the bottom of the hour. We're done. If anybody has any questions, please just put them in the Q&A section. Otherwise, we'll wrap up today. So finishing today, pretty strong. We're at 64.5 right now. We're just kind of sitting there. I think we've got some FOMC comments this afternoon.
Well, I was going to say all the market's green right now except for crude oil. Everything's up. And let's say everything: gold, stock, Japanese dollars versus yen is up. Japanese yen's, sorry, I beg your pardon. Yen's up against the dollar. Beg your pardon. Which is it's all a bit weird to me. Well, how can everything? None of this adds up. I actually think this is probably more to do with the quadruple expiry and the aftermath than it is with real fundamentals. I've got a horrible feeling that what we're seeing isn't natural or good.
Yeah. I'm just going to type in something here.
Literally looking at an article here on Yahoo, 45% of Americans will run out of money during retirement, including 45%. those who've invested and diversified.
Not looking good
because of inflation, right?
And I commented on our Discord channel to our members just before a call that for the first time ever, gold hit $2,700 an ounce.
Yeah.
And my question was, well, hang on, adjusted for inflation, is that really a new high? I mean, maybe it is. I don't know, but inflation's just been an absolute killer.
The gold's up 25% this year so far. So,
we're talking about the market crash earlier. I think that in the conversation I had this morning with a fellow, he's talking about historically during these crashes, gold has a bit of a spike, but then ends up falling as well, as much as 30%. And I kind of wonder if that would happen again, or if this time it's a bit different because the economy is in dire straits. I don't know.
It's not even about the economy. Gold isn't going anywhere because every other central bank in the world is buying it. Because they're getting ready for the big change from dollars being the reserve currency to whatever comes next, and they don't want to be the bag holder. So if gold drops 30%, I'm literally selling everything, remortgaging everything, and I'm piling in.
There you go. There's maybe people are very familiar. There's a term called gold bugs. And I remember being introduced to that term in the 1980s. And it's people who are always bullish on gold, and they've always existed. And it's been difficult for long stretches of time to be a gold bug. But I mean, gold really is just steady. Like it's been incredible the run it's had. And you have, in fairness to you, you have been saying nope, go gold. So
it's different this time. There's a question pending actually. So Thomas, we'll come to you in a second. I'm just going to blow on a minute. Last year, COMEX, the metal exchange in the US, on COMEX, if you trade gold, you can choose to take your delivery of your contracts in gold or in dollars. You can choose cash settlement or gold physical settlement. And as of last year, everyone's been taking physical settlement, demanding physical settlement, and nobody's been taking cash settlement. To such a degree that the LBMA banks who support all of that ran out of gold and then had to go and scramble to buy it in the market. Meanwhile, the central banks of China and Singapore and Russia and whoever else, you name it, are buying all the gold they can get. There's a panic squeeze going on, and it ain't going to stop. My price prediction for gold is $9,000.
Interesting. Yeah. I think I saw an article yesterday about Argentina sending a lot of their gold to London. A whole bunch.
Are they mental?
I don't know what to say.
You keep your gold. You self custody Bitcoin and you self custody gold.
There must be a reason that they're using it for something. They're not just doing it for shits and giggles. But So the question from Thomas is: can you elaborate a bit on the trading hours of ETF options versus Deribit options? Would it not be problematic for the ETF options to be limited to Wall Street trading hours? We can go down a bit of a rabbit hole here. because so ETF options are going to trade, during US hours, maybe the early session starts at for the CBOE 7:30 or something, but sort of, normal hours, 9:30 to 4. But how would this affect Deribit options? Like, would it hurt Deribit's business model having CBOE options?
Well, if anything, it just gives us two extra volatility points in the day, doesn't it? And it's I don't think it really hurts Deribit. Deribit are going to cater to a different crowd to CBOE. There are already options on CME in the US on Bitcoin directly, and they don't impact Deribit's business too much.
To be fair, it's not a lot of activity.
No. People, I mean, I think a lot of time people are trading OTC, and then they're just settling. They're blocking onto CME to have it somewhere other than as counterparty risk. I don't think it really hurts, because this affects everything, for like oil options and gold options and everything. Right, everything's got a 24-hour market, and even currencies. When I worked in the FX options business, they were opening and closing times for each of the banks in each of the regions, and they would the desks would just pass the responsibility on to the next region. And institutions are going to be hedging these options continuously with futures anyway. And the futures markets, stay open.
I was going to suggest maybe we, maybe I'll send a message off to the Deribit risk team and see if they want to come on call next week. If maybe they do have some real concerns, or I think there's a huge opportunity for them. Who knows? It might be something interesting. If they have something significant to share, maybe we'll have them come on and talk a bit about it from their perspective.
Yeah, I don't think it really. I think most people who trade options are not really anything more than a daily cadence, right? You trade a 1 week or a 1 month option, and you kind of leave it and see what happens. So I think if you're concerned about your option, what might happen to your option during the night, then you would just close it out and roll it the day before expiry, right? You wouldn't wait. I don't think it really changes anything.
All right. Well, if they are American style options, though, it might be an interesting way to. So let's say you didn't want to put yourself at risk of people exercising their options early, for example. You might want to spread some of that risk out and have European style options on the Deribit exchange. I don't know. Maybe I just thought of that. It never occurred to me before, but anyways. All right. Hey, we've gone a little bit over time, but interesting stuff going on. And of course, I don't know when they're due to start trading. Actually, I don't know if that was announced, but it's going to take a little while for it to all come into play.
I don't know. I haven't been watching. I've been out of the loop. I've been at this European blockchain conference in Barcelona. I haven't been to a conference for years. They're awful.
Oh, come on. You have good fun.
It's nice to meet people. It's nice to meet people, but
well, you're such an introvert. You never get out of the house, so it's probably good for you to get out. Yeah. Excellent. All right, everyone. Thanks a lot for joining us today, and we will see you again next Thursday.
Okay.